in that conversation with Johnson Chukwu into the African financial markets and the need for capital mobilization to tackle the continent's infrastructure deficiency. And that was the crux of the Standard Bank's conference that started today in Johannesburg with Africa's finance ministers, central bankers, pension fund managers, and other market institutions in attendance. Let's take a listen.
Data suggests a different story, though. And here are some of the key stats that I would like to quote. Africa today accounts for 40% of the global reserves of the critical minerals that are key in the energy transition. The continent leads the world in mobile banking, with sub-Saharan Africa holding nearly 50% of the global mobile money accounts and driving $2.5 billion in transactions on a daily basis. The expansion of fintech solutions led by M-Pesa, as an example, is broadening financial inclusion, particularly among underserviced communities. Africa's population of nearly 1.5 billion is forecasted to reach 2.5 billion by 2050. This is evident in the urban population growth that we've seen of approximately 350 million people in 2014 to nearly 500 million by the end of 2023, representing a 40% growth in just a decade. Of particular interest is its youthful demographic, which represents an untapped market and workforce, ready to drive the economic growth of each of our markets. Lastly, the Africa Continental Free Trade Area holds a promise of creating the largest free trade area in the world, boosting intra-Africa trade and promoting economic integration. So why are we here today? This conference aims to find solutions that are necessary for Africa's growth and to tackle issues in relation to Africa's debt and credit outlook. So how do we meet our financing needs without compromising our own growth and the sovereignty of each of our countries? Closing the infrastructure gap. What are some of the innovative funding models that can unlock Africa's full potential? The issue around energy stability and transition. How can we secure Africa's energy while embracing sustainability? Navigating this real difficult macroeconomic volatility. How does Africa respond cohesively to the big shifts in the global geopolitics and to be still able to deliver really strong growth? What are some of the structural and policy reforms that are necessary that will position Africa as a winning investment destination and attract the foreign direct investment? And lastly, what are some of these challenges that we're presently facing that require decisive and actionable solutions? The continent's economic fundamentals remain strong. According to the African Development Bank, GDP growth is still forecasted to grow to reach 4% in 2025 and nearly 4.5% by 2026, outpacing many other emerging markets. Africa also remains the world's second fastest growing region after Asia, with 12 of the 20 fastest growing economies projected to be in the continent. And whilst Africa's prospects and economic resilience are undeniable, achieving these growth rates requires resolute policy actions. Increased coordination between monetary and fiscal policies is required to manage issues such as inflation while promoting economic development. Furthermore, Africa's external debt now surpasses $1.5 trillion. And that is a number that often makes headlines, and rightly so. But I think one of the things of more concern to myself and the team at Standard Bank is the additional cost of the debt burden, which we believe stems from the inflated risk assessment, resulting in higher grades from rating agencies and increased market pricing. A 2023 study reported by the Africa Practice reveals that the continent could be losing up to $4.2 billion annually in interest payments on its loans, primarily of this inflated risk assessment. At Standard Bank, we're working with governments, multilaterals, and investors to design what we believe are financing solutions that will drive the long-term stability. We believe that Africa risk premium can be mitigated through improved investor relations, adherence to orthodox fiscal and monetary policies, and efficient use of borrowed funds. Africa's success should be predicated on investment, innovation, and economic development, rather than constrained by debt levels.
Global trade growth this year will still grow at around 3, maybe 4%. It's worth also considering that 7 of the world's 10 fastest growing trade corridors exclude the United States. That means that trade connectivity is expanding, even if the bifurcation is the United States and the rest of the world. With Europe, even now, who would have thought, being a representative of the global north, embracing the global south. As an adversary, the United States stands in that paradigm. We've argued for a length of time that economic activity is shifting from the west to the east. But it's not that simple. We cling to this notion, but it will not be a straight line. I'll amplify on that in a moment. There's a greater level of intolerance around the world, democratic dispensation increasingly being overtaken by illiberalism. And that illiberalism creating more extremities in terms of the level of discord, polarization in society. The last 30 years, the World Wide Web and the Internet of Things was foundational to providing impetus to global economic growth. And now it's artificial intelligence that is going to provide the next set of S-curves, along with quantum computing. One of the very significant differences is that for the last 30 years, the World Wide Web and the Internet of Stuff was largely free. One just needed hardware, not to belittle accessing hardware as a sometimes barrier to entry. But governments did not seek primacy in technology the way they do now. And the microchip wars and the attempt by the United States to preclude, say, China from being able to get access to more sophisticated technology